for joining us. For my fellow Francophone, this webinar is interpreted, so you can choose the French languages on the box. We are giving 2 minutes to people to join before we start. And while we're waiting for people, I'm just going to share some housekeeping rules so that we have a good experience with this webinar. So, as you know, we are here together for 1 hour and a half. The webinar is on the State of Instant Inclusive Payment System Report 23, launched in Addis Ababa last November 8th. Today we have our authors, Jacqueline Jumah, who is our Director of Advocacy and Partnerships at Africananda, and our own Sabine Mensah, Deputy CEO. So during this 1 hour and a half, we will have a 40-minute presentation on the SIIPS key findings and insights. And then for the rest of the time, we will dedicate it to open discussions and Q&A. You have the authors, so it's a good occasion for you to ask any question you have on the SIIPS report, the data, etc. So it's a webinar, all the microphones are muted. If you want to ask any question or interact, feel free to use the chat box. And finally, of course, we will share with you all the presentation and the recording after the session. Thank you very much. I think we can already start. I'm going to hand over to Jacqueline for the introduction. Over to you, Jacqueline.
Jacqueline, I'm not hearing you. You're on mute.
Jacqueline, you're on mute.
Hello, can you hear me? Sorry, I didn't get...
Yes, we can hear you.
I can't hear you, Barry.
We hear you well, and the floor is yours now.
Hello, everybody. My name is Jacqueline Jumah, the Advocacy and Capacity Development Director at Africananda. Thank you.
Hello, everybody. My name is Sabine Mensah. I'm Deputy CEO at Africananda. It is a pleasure to be here with you and really have the opportunity to present the second series of this State of Inclusive Instant Payment Systems in Africa. This journey started last year when we produced the first one, and we also launched the second report on November 8th in Addis Ababa in Ethiopia. So before we start diving into those insights of the report, Jacqueline, maybe you can talk about the methodology used for this research.
Sure. So the SIIPS, or what we call the State of Inclusive Instant Payment Systems Report 2023, it's the second in a series of these reports, and the outcome of a collaboration between Africananda, the World Bank, and the UNECA. The intention of this research is to inform the public and private sector stakeholders in Africa and beyond on the developments of the instant retail payment system ecosystem in Africa, including an assessment of inclusivity of such systems. And from inclusivity, we look at both functionality and governance. There's also the objective of understanding payments usage and drivers and barriers that individuals and MSMEs face, and taking these perspectives into the design of IPS. Only systems with live transactions as of June 2023 were considered as existing or live instant payment systems. And the research involved a mix of methodology, where from the supply side, there was desk research, looking into literature review, interviews from key informants, like, for instance, payment systems experts, regulators, IPS operators, and so on and so forth. The demand side covered several countries, Cameroon, Malawi, Morocco, Rwanda, and Senegal. Some of the outputs involve detailed reports and summary reports in English and French, case studies where we took a closer look at IPSs from Rwanda, that is eCash, in Zambia, National Financial Switch, in Malawi, NAT Switch, and in the CIMAC region, we explored Jumah Pay to understand the journey as well as some early lessons that we can take on. Next slide, please. So before we delve into the picture of the landscape, it's important that we all understand what we mean by instant payment systems. In many occasions, I'm asked, or we hear from various stakeholders that, why are you not mentioning particular payment systems? What we refer to as instant payment systems are retail payment systems that are multilateral, open loop, enable push payments, real-time for 24 hours, 365 days a year, or as close to that as possible. And when it comes to these payment systems being inclusive, we add a layer of ensuring that they are pro-all, ensuring that everybody, whatever walk of life, whatever walks of life have access and can use these instant payment systems. And we begin to look at some of the attributes that make these instant payment systems inclusive. That means enabling low value, because from what we're experiencing in Africa, in order for instant payment systems to support all, they have to a large extent, support low value transactions. And we look at other attributes which are in favor of ensuring pro-all instant payment systems, like having those that are based on open loop and multilateral interoperability, scenarios where the schemes they ensure fair access by the participants, scenarios where the central bank has a role to contribute or to guide in the governance of the scheme, and so on and so forth. So when these attributes are further layered onto the what we call an IPS, we believe this would be gearing towards the journey of inclusivity. And we're not saying that these are all the attributes, because as we move along, we will showcase how we came about this and how we continue to build this as we factor in what ideally should be inclusive instant payment systems. Next slide, please.
All right. Maybe, Jacqueline, we take it a bit slow for our translators to catch up with us. But, okay. Oftentimes the question we ask or people ask is, is this system inclusive? And one has to wonder, is the answer yes? No, maybe, not sure. For us at Africanenda, the answer is it depends, because we see inclusivity as a spectrum. And in that spectrum, for us, there are really 3 levels. And these levels are based on criteria of functionality, how inclusive functionalities are, and how inclusive the governance of the system is, and also how consumer-centric the system is. So at the most basic level, we're looking at systems that enable the most supported channel in the country. So if in your country, mobile is the most used channel, then of course, the system has to enable mobile, regardless of what type of device you have, regardless of where you have, if you have, or a smartphone or the most basic phone, it has to enable that. And at the bare minimum as well, it has to enable the capacity to send and receive money, so person-to-person transfer, and the capacity also to pay person to business. So if a system meets these criteria, then the system has a basic level of inclusivity. And of course, as we move across the spectrum, when we get to the progress level of inclusivity, we are looking at systems that are, first of all, open to all financial service providers in the country. Whether you're a bank, you're a non-bank, you're a mobile operator, you're a microfinance institution, you are a fintech, you're a startup, you all have equal access to the system. Also, there is interoperability between all the financial service providers. Look, my grandmother doesn't have a lot of money, but she has the most basic phone, and she is with one provider, and that's different from me. I am with another provider. So But because there's interoperability, she's able to request money from me. I'm able to send to her, and she's able to send to me without having to pay any additional, SIM card to have a device with the next provider. So it doesn't matter which provider, there's interoperability all to all. And the central bank plays a key role in balancing private sector interests versus the common good of financial inclusion, and upholding national or regional financial inclusion strategies, and making sure that all players are coming in to contribute to deliver financial services for all of us, regardless of where we are and regardless of with whom we do business with. So those are key elements that we consider as we assess the progress level of inclusivity in the spectrum. And of course, the aspirational level where we would like to see all the systems move toward, it's the mature level of inclusivity. And at that level, we're looking at many things. From a consumer perspective, digital is only useful if you can do more than what you can do with cash. So the use cases has to be expanded. So it's not only just sending money, receiving money, paying, but you're also interacting with government services. So you can receive government benefits, government to person transaction. You can also pay for government services, person to government. You can also, if you are a small, medium business enterprise, you can also leverage business to business transactions. So all expanded use cases are one component of the mature inclusivity, so that digital financial services are really adding more value than just cash and giving consumers a reason to adopt the digital services. The second component in the mature inclusivity is really around, again, safeguarding the consumer. In an era of digital services where everything is instant, we need to make sure that there are consumer protection mechanisms that are built into the system, that there are consumer recourse mechanisms that are transparent, that are known, and that are enforceable. Hence the necessity for the key role for the regulator, central bank, or other into the scheme. So it's not only making sure that you have these mechanisms, but it's for consumers to know if the system doesn't work for one reason or the other, where do I complain? How do I make sure that the complaint is actually investigated and there is a resolution at the end of the process? Or if I'm defrauded one way or the other, what is my recourse and what's the responsibility of the service provider? And the third component in the mature level inclusivity, it's really about affordability and making sure that the business is, the service is provided at the lowest cost point as possible for consumer to, again, enable the mass adoption of the system to be able to move forward. So as we're looking at the inclusivity of the payment systems, this comes into a larger whole of digital public infrastructure that I'm sure, Jacqueline, you can take on and see how we fit into that DPI infrastructure.
Thank you. I'll try and speak slowly, but just signal me in case I'm moving very fast. In order for IPS in Africa to increase access for all citizens and form an effective payment layer in DPIs, systems need to improve in sustainability, customer value proposition, the provider value proposition, which derives incentives, and policy. In terms of sustainability, we are looking at things like increasing the transparency and the open access of scheme rules, as well as the involvement of all payment service providers in scheme rule design or in providing input. We're also looking at design for scale, or designing this payment systems for scale to address market needs while limiting end user costs compared with cash, or the inconvenience that comes with making cash payments. When we talk about customer centricity, we are looking at taking our consideration into the pricing models that can compete with cash and existing closed loop proprietary solutions to incentivize uptake, as well as inclusive services for end user, including agent channels and other widespread touch points journals, as well as ensuring that we layer on recourse mechanisms, just as like Sabine has said. And so on, moving into other considerations from a compelling value proposition for the provider and incentives, where we look at an emphasis of value-added services to complement the offerings by the FSPs, and development of open APIs, for example, open APIs, sorry, to promote open banking and foster a competitive advantage. Back to policy. Continued improvement of the support that is extended to the ecosystem through risk-based and harmonized licensing of payment service providers, ensuring that their network upgrades, sustained rollout of this payment service providers, and so on. Building out a principles-based regulatory framework for consumer protection and data privacy, and moving towards risk-based supervision. And then lastly, emphasis on regional harmonization, that is in the case of cross-border payments and transfers to enable instant payment systems to begin to catalyze digital trade and remittances and connecting with other continental goals. Over to you, Sabine.
Thank you very much. I think we're getting to the most interesting part of the discussion for me, and that's the landscape and what has changed in that landscape. So if you go to the next slide, you will see that today, as we look at Africa, there are 32 instant payment systems live. 29 of those systems are domestic national country systems, and 3 are regional systems. And if we look at the domestic systems, the 29, they cover 21 countries. And part of the 3 regional systems, we have the Jumah system in Central African region, which covers the 6 countries of the CEMAC region. So if you take it into account, you're about 27 countries have access to instant payment systems at the national level, whether through its country systems or one regional system. One of the things I want to flag to you are the changes between 2022 and 2023. So we have 3 new systems that came on board: ET Switch in Ethiopia, Virement Instantané in Morocco, and PayShap in South Africa. While last year we had 5 countries with multiple instant payment systems, this year we have 7 countries with multiple instant payment systems, namely Egypt, Ghana, Kenya, Morocco, Nigeria, South Africa, and Tanzania. Interesting fact is only 1 country in Ghana are these different systems in a country all interoperable with one another, just Ghana. We also, from last year to this year, had 3 reclassification. For instance, Misa Digital in Egypt, and eCash in Rwanda, and Mocash in Mauritius. So for Misa Digital and eCash in Rwanda, they were previously mobile money instant payment systems, and they're now cross-domain. So they've enabled both interoperability between mobile money and bank account and vice versa. And Mocash, what used to be in Mauritius, used to be a bank instant payment system, has now also enabled mobile money in the ecosystem. I think what we still need to remember is that despite the dynamism of the landscape and the new systems that have come in, there are still 27 countries in Africa that lack domestic instant payment system capabilities as of 2023. So roughly half of the African population lack access to domestic instant payment systems. Although we have to recognize that regional systems as well as proprietary systems are also provided services in these countries as we're looking at it. So dynamic market, modest changes with 3 new systems that just came in, but definitely a lot of movement happening in Africa. And from a transaction perspective, also, you will see how this has grown. But maybe, Jacqueline, you want to talk about the different types of IPS that we have in this landscape. Jacqueline, to you.
Sure. Last year, we introduced these archetypes in the initial edition of SIIPS, where we saw that in the landscape we have 4 types of instant payment systems. That is the bank instant payment systems, which facilitates interoperability between banks, mobile money instant payment systems, where provides access for mobile money providers and supports instruments, for mobile money players. We have the cross-domain IPS, which constitutes banks, non-banks, and that is also including mobile money operators, as well as other, non-bank entities. And then we have the sovereign currency instant payment systems. Now, I look back, I look at what is happening, that is in last year's research and the insights coming from this year. We are seeing that cross-domain IPSs are the most prevalent, followed by bank IPS and then a mobile money IPS. And this is because there's growing into all-to-all interoperability, where all-to-all just involves that aspect of mobile money players operating with the banks and interoperating with any other non-bank financial institutions. And we'll have a feel of what is at play.
Okay, I think Jacqueline might be experiencing some.
Can you hear me?
We broke up for a minute.
Hello.
Now we can hear you.
Can you hear me now?
Yes.
Yeah, so it's the archetypes also present some interesting dynamics in the volumes and in how the instant payment systems are supporting the volumes of transactions as well as the value transactions, as shall be showcased in the next slide.
Thank you very much, Jacqueline. And yes, in 2022, the 32 IPS systems in Africa processed nearly 32 billion transactions, which is worth about 1.2 trillion US dollars. So tremendous growth. Actually, if you look at it over the past 5 years, has an average growth rate of 47% on transaction volume and 39%, transaction volume 47% and 39% on transaction value. But the important thing to note here is that these numbers are actually underestimated for the simple reason that we were not able to gather all the data from the 32 instant payment systems. The data we have that's estimated under these charts are coming from 22 instant payment system. So the data for 10 were unavailable either on the public domain or we have not been able to access them. And I want to take a chance to list the few that we have not been able to access for your information. So we did not have any data from Sira Djibouti, neither from Misa Digital in Egypt, from GamSwitch in the Gambia, from MarocPay in Morocco, from Virma Instantane in Morocco, from PayShap in South Africa, from TIPS in Tanzania, from the Tunisia mobile money systems, from PAPS, and from TCIB in the SADC region. So it means that there's even more transaction processed into the ecosystem than what we are seeing today in this. And we hope that with your support, we can really push and advocate for more data availability and transparency as possible. We really want to call on the instant payment switch operators or the central banks that are managing these overseeing this switch to publish yearly data at bare minimum. What is the volume of transaction processed in the year? What's the value of transaction processed? And of course, looking at as much granularity as possible. Can we even get to a point where we have, on us versus off us transactions from the switch, if possible? So we've had some challenges this year, the first year we went into public data, we did a lot of desk research and we had interview of the different stakeholders. That was in 2022. For the 2023 report, we actually also sent out direct letters to the SIIPS, the IPS operators, as well as the central banks. And we receive a few of these information, but not all of them. So hopefully with more data and measurement, more information for us to be able to assess how these switches are doing and share, and of course, more lessons and learning for the ecosystem from us. I think one of the key questions we've asked ourselves, though, is what's also the sustainability of these systems. Something that I want to share with you and flag here, and when you look at the bottom of the systems, you can see how mobile money from a volume of transaction is really contributing a high level, but from a value perspective, it is really I'm sorry, the cross-domain IPS that's really contributing. And that's really because a lot of the low-value transactions are going to the mobile money ecosystem, and the cross-domain enabling interoperability between not only mobile money, but also bank, and a bank IPS tend to have a larger volume and price point in terms of value of transactions. So, but maybe Jacqueline, you can tell us a bit, from the sustainability question, how we measure it at African and what the picture is looking like.
Okay, after appreciating the volumes and the values as processed by the different archetypes, we see that the value of transactions relative to gross national income, that's the GNI, indicates how much economic activity the system supports, the utility it provides to the end user, and how important the instant payment system is to a country's economy. Here we are seeing IPS transaction values relative to their respective GNIs in this period, 2022-2023, for those IPSs that where data was available, as emphasized by Sabine. We see 3 countries have transaction values above 100% of the GNI, that is Ghana, Nigeria, and Uganda at 129%, 186%, and 124% respectively. A further 6 countries, that is Kenya, Madagascar, Mozambique, South Africa, Tanzania, and Zambia, processing values of between 10 to 100% of the GNI. So the emphasis goes back to how, the significance of this growing instant payment systems and the level of economic outputs or economic activity that the instant payment system supports. We're still watching the industry and hoping to see how this transitions in the coming years.
Thank you very much, Jacqueline. Let me take this one. I love this assessment of inclusivity, because when we started in 2021, we ourselves, African and our team, we were challenged in defining our strategy and the impact we wanted to seek in the market and how complementary we were with others. So, and that's where the question of how do we assess that inclusivity really came up, and by being able to propose a framework to the ecosystem and passing countries to this framework really helped us ourselves define where we want to go and how we can help in pushing the envelope. I mean, from a findings perspective, you can see most of the instant payment systems in Africa deliver only a basic level of inclusivity. So we have 12 that do not even feel the basic level of inclusivity. And from those 12, you have about 7 who do not support the minimum use cases, P2B and P2B. and another who do not actually offer the preferred digital channels that are there, and 4 enable P2B but do not offer the preferred digital channel, and a few of them that are not ranked are actually due to the fact that I've mentioned earlier, we just don't have the data and information to be able to do the assessment. My hope, my personal hope is that next year, as we go through the next report, perhaps we won't have anybody in the not ranked category, meaning that we have at least the information and we are able from all, and we are able to do the assessment. We have 15 systems that meet the basic level criteria, and we have 5 of them that are in the progressed inclusivity criteria. So far, we don't have any mature IPS to date, and that's understandable. Mind you, we've seen a lot of development in the IPS ecosystem in the past 5 years, and we also know that most of the IPS will typically start with 1 or 2 use cases before now working to broaden the use cases. So it's not a surprise that we don't have a maturity, but I think it's a call upon all of us working with the different regulators, the different IPS operators to really fast track our journey towards the mature level of inclusivity. Couple of things that I want to flag for you on this inclusivity pattern. It's like, for instance, the Nigeria instant payment system offers a broad use cases. However, it doesn't necessarily allow equal input by all of the participants into the scheme, and at the governance level, mostly represented by banks and not necessarily the rest of the ecosystem. So what was, if this changes, then of course this will move towards more inclusivity. The IPS ecosystem in Ghana, for instance, offers broadest use cases and really meets most of the criteria. I think where it is not yet at the mature level is the recourse mechanism provided by the participant and how efficient and transparent they are from a consumer perspective. Mind you, the consumer recourse mechanism is the most complex criteria to measure in the ecosystem. And of course, there's also the governance piece of the scheme in enabling all stakeholders to be involved into the ownership of the system. One example is a good one to flag is actually SIIPS in Zimbabwe offers a separate end user recourse channel, which we haven't seen a lot into the ecosystem, but yet has more work to do to enable progress level of inclusivity. So overall, there's great progress in the IPS ecosystem, a very dynamic ecosystem, but not all are inclusive. And out of the 5 that are inclusive, we're really seeing about 9 countries. So the GMAC Pay system covers 6 countries in itself, plus the national financial system in Zambia, NatSwitch in Malawi, and of course the Ghana ecosystem, the ecosystem of instant payment systems in Ghana. I think from that perspective, leave it up to there, but I do want to mention that although, we were saying we have the 32 systems live, the momentum is also going. If you go to the next slide, where you can see, we have found out that through our research that there are 17 countries that are at different stages of development of their instant payment systems across the continent. So there's something that we're going to be looking into as we do the next report to see how far they are in the development of the ecosystem, and if any of these in development turn to be live next year. Now, if you put the 32 live systems and the 7 systems that are in planning, we found about 7 countries that remain haven't communicated anything about it, or they have not communicated, or they're not planning. And those include Botswana, Cabo Verde, Democratic Republic of Congo, Eritrea, Libya, the Seychelles, and South Sudan. So from a regional perspective, so yes, we have 3 regional systems that are live, which you've seen on the landscape piece, but there are also 3 systems that are building. The Waimu system ongoing. It's in the building phase right now, as well as the East African community system, and of course the COMESA community. So 3 of them regional in the build phase, and we look forward to see how many of them will turn into live by next year when we do back the reporting. I think one thing to consider, if you go to the next slide, is that for us at Africanenda, this exercise of landscape, it's not just a supply side story. It really is looking at the supply side, but also looking at the demand and of course the policy implication while we're doing this exercise. So we always make sure through the process every year that we have at least, I think about 5 countries. First year we did 7 countries for the research, I think. This year we had 5-country consumer research. So and taking us through the consumer research and some of the findings, we'll appreciate. To you. You're on mute, Jacqueline.
Thank you. I still can't see the slide. Okay. Yeah, so it's important, like Sabine mentioned, to also get to hear the voice of the consumer. And out of what we are hearing from the consumer side, using this and incorporating the insights into the development of instant payment systems, or into the design of these payment systems. We appreciate that access and usage of digital payments are distinct steps with associated drivers and barriers. And these are some of the drivers and barriers into the initial use and into the frequent use of instant payment, of solutions supported by instant payment systems. In terms of access, before consumers can use a digital payment product, they must have a financial account, of course, which requires physical access to agent and to bank locations for both mobile money and financial institution account opening, and any necessary account-related documentation to authenticate that, to identify themselves. We're also seeing a bit of language barriers that can prevent access to the institutions, tools and information needed at that point of account opening. In the early usage, once registered, the consumers must have a compelling reason, of course, and that ties to how well the system supports wide use cases, a compelling reason to use digital payments instead of cash, because again, we're competing against cash. The decision to use a digital payment instrument depends on the perceived balance between the costs and benefits of its use. So weighing in on how the costs involved and the convenience that is derived, which reflects again and introduces behavioral biases, comfort and preferences amongst customers and how they interact with these digital payments. Awareness, user capability and trust are also critical factors coming out of this year's research, and they're also influencing the decisions around driving the design of payments of these systems in order to respond to the real use cases and needs as regards trust and expectations of customers. From a habitual or frequent use perspective, over time, digital payments become embedded really into the daily life of consumers as they move from just conducting ad hoc transactions to consistent and frequent use of digital payments for a variety of their needs, use cases involved, and so on. Among the range of factors that impact whether digital payments become frequent, what stands out the most are these that you're seeing: the ease of use, BIM drivers, network effects, of course, the reliability, recourse, and in some instances, speed. Because even as we develop payment systems and we all want to adhere to instant is still varied. It can range from a matter of seconds to hours. So we will just, in the next slide, having understood these challenges, please go to the next slide. They help in the thinking around, so what? So we know what are the drivers and what are the barriers. How can we then use this in to influence how we are designing the payment systems, or how can stakeholders pursue these opportunities to drive inclusivity of these instant payment systems? And we begin to see that there are many things that can be done, but at the bare minimum, if these 5 considerations, starting with the very least of expanding the use cases, because we are seeing expanding the use cases, and again, depending on what the country nuances, of course, but we're seeing that at least starting with expanding these use cases to ensure that the payment systems speak to as very many pain points as possible. There's also the considerations around ensuring that we employ technology standards that facilitate efficiency and IPS adoption, considering the different instruments and channels that support the use cases. And then also considerations around a compelling value proposition for the PSPs. We are talking about both value proposition from the demand side, offering meaningful or supporting solutions that are meaningful to the users and for all, but also most importantly, supporting incentives for the payment service providers, ensuring that there's a fair opportunity in terms of input, which is what drives innovation and competition necessary for the evolution of the market and bringing down the costs. There's also the consideration around reducing the gender gap, which in Africa continues to persist, whereby in as much as, whereby we're beginning to appreciate that there's the difference in the usage of digital payments, or how gender interacts with the digital payments. And so efforts around ensuring that this gap is reduced through gender intentionality, ensuring that perhaps we could have some levers at the scheme level that we can touch to nudge or influence the uptake or adoption of digital payments by women. And then lastly, but not least, looking at the business case model. Looking at the business model, which derives the business case, and which can only be achieved when scale is driven. Later on, we'll talk about sustainability and some of the elements that we are beginning to see, and why we are insisting on this scale to drive usage of instant payment systems.
All right. The report this year had a spotlight on cross-border retail payment, really understanding the challenges in cross-border payments, but also and understanding what needs to happen from a regulatory perspective. And I can see my team is telling us that we need to speed up, so we'll love for more time for questions. So I'm going to go a bit quickly here. But from a challenge perspective, and I'm sure if you are a user, and if you're like me, I live in Nairobi and my mother is in Burkina Faso, and I have extended family across most of West Africa. So it becomes challenging. It is very expensive to send money from Kenya to Burkina Faso. It's not straightforward. I don't have a wallet that will enable me to just instantly send money from East to West Africa. And then, of course, if you look at it from an MSME's perspective and from traders' perspective, how to facilitate transactions in a formal and digital ecosystem is challenging. So most consumers will actually use informal methods to transact. If you look at it from a regulatory perspective, I think there are 3 key areas where there are challenges. One is, the licensing processes for non-banks, particularly intervening in different countries across the continent. So there's a lack of disproportionate licensing regime for the fintechs. There are also challenges into the customer due diligence processes, or the lack of eKYC in some countries from a regulatory perspective. And then you have also everything that's around data, interoperability, as well as foreign exchange, if you're talking about cross-border payment. So And all of this regulatory complexity also has a burden on the operational side for financial service providers that are providing cross-border payment systems, whether these are expensive or excessive liquidity management solutions that have to be put into place, and also the different messaging standards that are being used to transact and provide the information can bring some challenges into the transaction. I think if you look into the next slide, what we've tried to do is a benchmark across and really understand from a challenge perspective where the bottlenecks lies. And you can see here, we look at it from an access to market perspective, but also from ease of conducting payment from the consumer perspective, and then from the supply side, the operators that are providing the data. And of course, some of these challenges are within the control of central bank financial regulators. Some aren't necessarily directly, but there's definitely need for harmonization to enable more seamless cross-border payments in Africa. And if you go to the next slide, our approach here was to look at, where has there been harmonization journey from that perspective, different examples in Europe and in Asia. And if there were to be, a process of harmonization, how did it go? How long it took, and what are some of the building blocks? And here you can see is really making sure that, there's a coordination between the regulators, especially if you're looking at Africa. We're looking at a country regulations that are harmonized, but we have regional blocks that have to be harmonized until we can get to Pan-African opportunity. This opportunity is already offered on the table with the Africa Continental Free Trade Area that opens a market of more than 1 billion to each business and each individual on the continent. So for us, the building block would be, first of all, making sure that the regional and the domestic policies are really crafted with inclusivity in mind. And of course, the second piece would be to align the regulatory framework between the country, the regional, so that it's harmonized, or there's a mutual recognition to ease and doing business from one country to the other, and being able to facilitate the speed and lower the cost of these transactions. And then at last but not least, these harmonization processes takes even more relevance within the context of these trade agreement, and the AFCFTA provides a great opportunity to do so. And as you see, these processes can go from, the first building block 1 to 3 years, or the second one 2 to 10, and overall 5 to 10 for the entrenchment into the trade agreement. So we certainly have an opportunity to work at it and fast track that process. This is happening. I mean, you have regional blocks that are already working on harmonization in the continent, and what we're trying to put out is what can be done to accelerate this process across the entire continent. I think the last piece on the report is really for us to look at the future trends. If you move to the next slide, and from that perspective, we look at it, next slide, please, on 3 key areas. So from a market trends perspective, what's happening, and also from a system perspective and a consumer perspective. And you can see it here, but I'll just pick out a few to really bring it up. And as we are in this digital ecosystem, we still need to make sure that there is a relay to translate, cash into digital, and agents will continue to play a key role as enabler of that digital value chain in Africa. And one thing I want to bring up is that also the fintechs from a supply side will be critical contributors to innovative solutions across the network. And that's why the necessity to have, a level playing field and interoperability and digital rails that are open, that enable these innovations to come into the process. From a system perspective, I think what we've seen is that the fintechs are usually coming either at the front end or the back end, but they're not direct participant into the ecosystem. Open finance is emerging. I think it's an area to watch and see how this is going to change the landscape, particularly in enabling more innovations to come into the ecosystem. When we look at the consumer side, there's still more awareness about the risk of fraud. So the security of the system is key. And of course, the affordability of it is key as well. So do you want to take the next one, Jacqueline? We need to go rather quickly.
Sure. When all is said and done, there's a lot that we can say, there's a lot that is in the report that we haven't highlighted, but looking for the key actions for different stakeholders. So I'd encourage all of us to go to the report and 300 pages report and dig in and ask as many questions. Let's engage. But what we have managed to just document here at a high level, some of the actions have to do with actions by policymakers and regulators, as well as the other IPS stakeholders. From a policy perspective, a lot is happening. We're seeing the space opening up into, gearing up for reforms. I'm sure many of you who have been to conferences have had a lot of conversations around policy harmonization. We're supporting that with research and participating in dialogue. There's more that needs to happen in terms of creating incentives for the design of IIPS that is informed by the data sharing. And that's why at Africananda we have this campaign, which we call the Data Availability, Transparency and Impact campaign. We call upon sharing data so that these pieces of research that like this can help inform policy reforms and other policy considerations as the space changes. Also looking at how best we can have access to scheme rules in the sector, because not so many instant payment systems publish the scheme rules. It's important that we track this to enable us measure inclusivity and how these instant payment systems are gearing towards scale. And then there's also the call for risk-based supervision, whereby we have principle-based regulatory frameworks to ensure that certain aspects like consumer protection and data privacy, which are critical to the inclusivity of instant payment systems, are adhered to domestically as well as from a cross-border point of view. Crossing to the other side of the equation, where we have the other IPS stakeholders, they also have some take-homes. Please move to the next slide. In basically considerations that they need to be top of mind when it comes to designing instant payment systems, both from a functionality point of view and the governance structures to support financial inclusion. And all these cannot happen without dialogue at the end of the day, because increasingly we are seeing some sort of dominance in the industry where we have a lot of decisions being pushed by the commercial banks and the central banks. We call upon, continued dialogue, even with the non-banks from a scheme perspective and providing input into how these schemes are evolving. So I'll leave it at that for now and open the floor for questions. Thank you.
Actually, no, I want to take a minute. Can you go back to really stress again the data availability? And we particularly want to thank the central banks of Ghana, Kenya, Madagascar, Mozambique, and Rwanda for sharing with us when we ask for the data for the different countries, as well as 7 switch operators in Kenya, IPSL in Kenya, NatSwitch in Malawi, eCash in Rwanda, RTC in South Africa, Ezekiel in Zambia, and ZipIt in Zimbabwe, and of course, GMACPay. These operators and central banks have provided the data that has enabled us to have better data for this year's report, and we thank them, and we do hope that next year we'll have even more data from the ecosystem to be able to report back to you. So I think now we are happy to take any questions that are out there in the floor. Back to you, Barry.
Thank you very much, Sabine and Jacqueline, for this presentation. I think there is a lot more insights in the full report, so I encourage everybody to go on our website and then download the full report. We have some questions in the chat. The first one is saying, we have seen payment solutions in different countries being used for the purpose of raising revenue directly through taxing the value of transaction. Example in Tanzania, Uganda, Ghana, etc. And indirectly through using the information flows to inform taxation in Kenya, for example. These initiatives are creating policy conflicts between government departments, better, more inclusive financial systems and revenue, and beginning to result in self-exclusion from this payment system, from those affected. What should we be doing?
That's a tough one. And I recognize that, yes, we've seen, the taxes. I think in Uganda, it was a 1% levy was imposed on mobile money withdrawal transactions, which was cut actually to 0.5% following the public pushback, and a 24% drop in transaction value, according to UNCDF, I think. There's also 1.75% e-levy that Ghana had, and it was also reduced to 1.5%, and then 1% in January 2023. And I think Cameroon also introduced a 0.2 mobile money tax, and the Zimbabweans have been paying the highest money transfer taxes, 2% in Africa. Reality that we deal with. What can we do? I think it is important that there is a collaborative process with the regulators, particularly I think the industry associations, whether it's a payment association, digital finance associations at a country level, have to find a way to work with the regulators and advocate for the fact that by having digital, we are really the financial inclusion goals are important, and digital is one way to reach these financial inclusion goals. And if we are on the other end taxing those, then we will risk the reverse mechanism. And some of these countries have seen the drop in the transactions that happen with these decisions. I think from our side is more advocacy from a sectorial level and a coalition of the willing countries to really push as much as possible the importance of being long-term minded in enabling a digital ecosystem that is affordable for all, and that would bring millions of people from in the formal financial inclusion realm and push this advocacy as much as we can. Not sure there's much that I can say about this one, but welcome to the next question. Or Bebe, sorry, or if you have anything that you want to add, you go for it.
Jacqueline, any take on that one? Right, we can move to the second question. I've seen real challenges in some IPS evolving from the initial launch. Value proposition, governance, and ownership issues are part of the reason. How can we move towards more mature systems, more mature ecosystems?
All right, that one is also, it's not an easy one. Maybe I can refer back to what we've seen in the 2 SIIPS reports in terms of the ownership. Sometimes most of the schemes that we've seen central bank driven, or they have also an entity that's designated as the switch, case in point in Ghana, for instance, with GIPS, but the ownership mostly the central bank level. Then we also have the private sector association driven schemes where we have the members of the association having the ownership. And on that front, we've seen mostly the commercial banks owning some of the different switches. There are 2 opportunities from an inclusive governance perspective. One would be to have a board, in the board of directors, all the different financial service providers, bodies represented, whether they are banks, non-banks, MNOs, e-money issuers, fintechs, and whatnot are represented, and with an equal voice, regardless of the, share of market that they have. And then, of course, that board of directors looked at each to the decisions for the switch and provide a balanced perspective because of the representation and the equal voice or equal opportunity that's given to each sector to intervene. The second one is actually to also have each of the different banks and non-bank into the ownership of the organization as much as possible, and see to what extent, that can also bring a balanced perspective in the governance piece. And if none of this is available, there's still the opportunity to have a process whereas the decision of the schemes are put back to the market for consultations and feedback, and these consultations are taken into consideration prior to decisions being making, in the spirit of really providing as much inclusive governance as possible. So I think part of our work also at African ENDA is to see through the inclusivity spectrum where the different schemes are, and offer our support to see how we can, make recommendation, look at benchmark outside of, Africa or in Africa that can provide some opportunities to transition towards more inclusive governance from a scheme ownership or a consultative process that's embedded into the decision-making process of the organizations. Jacqueline?
I'm actually struggling to hear you, Sabine.
Okay. Sorry, Barry, were you able to hear me at all?
I can hear you now.
Yes.
Okay. No, if you want to add anything to the scheme ownership question, by all means. And I think the earlier question about the taxes.
No, thank you. I think you've covered that well.
Okay, awesome.
So the next question is on CBDC. What is the relationship between IPS system, IPS and CBDC systems in Africa? Is that possible that IPS and CBDC work together in the same infrastructure? And if so, what would be the design model between the two?
All right, Jacqueline, you want to take the question? Can I ask you, Barry, to go back to the slide with the different type of IPS? You will see one, CBD sovereign money IPS that's there. But Jacqueline, go ahead.
Yeah, so I was going to say that if we can go back to that slide, we'll see that a CBDC, in our definition, a CBDC IPS is what we are calling the sovereign currency instant payment system. And by this, we just mean that, from our definition, the CBDC IPS combines a sovereign currency instrument and value transfer system that can provide a unified digital value transfer between commercial instrument systems, institutional stakeholders, and individuals within an economy. So it's one, it's a type of instant payment systems that takes that sovereign currency instruments and value transfer system into consideration. And like the other, types of IPSs.
Can I add to that? I mean, the CBDC question is a very interesting one, and you will see also in the SIIPS report, we looked at it. We have a list of that we found from an IMF source of different central banks that are investigating the potential of CBDC. We see a lot of demand for IMF or World Bank support on these investigation of CBDC and what value it could bring in the ecosystem. And for us, I think the role of CBDC within the ecosystem depends. It depends on the context. It depends on the penetration of digital and adoption of digital financial services within the country. It depends also on the ambitions of the regulator, whether the CBDC is to be used for wholesale within the financial system to, enable more fluidity, or if the ambition is a retail CBDC per se. What we can see in Africa is that the jury is still out on how CBDC is going to redefine, the financial inclusion landscape, if any, and how this is linked. So I think it's an area that we are definitely watching carefully. A lot of when we did our research, the tendency or where a lot of the research of the central banks we're learning was mostly on the wholesale side, and also the potential that CBDC can have for cross-border payment and, overcoming some of the challenges we see there. But I think, again, too soon to say at this point. The jury's still out to see how CBDC will transform the landscape in Africa as we see more implementation. I hope that answers the question.
All right, thank you, Sabine. I also wanted to add that we have a nice blog on CBDC on our website that gives a review, and then I think I encourage people to go and check this first piece. The second piece is ongoing and will be published soon. So I don't have any other question on the Q&A session. It means that people are satisfied with what you have presented. Maybe we can just wrap up. Any call to action, any final words for each of you before we close?
Well, I think for me that more data, more transparency, common measurement, and if at least just give us what volumes and values have been transacted into the ecosystem, that would be great. I do want to call out on Central Bank of Ghana and Malawi have actually not only provided data, but their data is disaggregated by on-us transaction versus off-us transaction. Now, that brings a layer of analytics that we didn't have last year for these two countries. And that layer of analytics brings up the fact that, the value proposition when you're doing your instant payment system has to be a win-win between the private sector and, of course, the inclusivity mandates that we're doing, and that they need to be involved into the equation. So we make sure that the system is actually used at maximum capacity. So my call to action would be the more data, the more information we can get, so we are able to just, assess each of the different schemes on the inclusivity, but share back with the ecosystem. I think this will help us grow the body of knowledge on instant payment systems in Africa and inclusivity overall. We at African are available to all countries in Africa. Our mandate is Pan-African, and we really look forward to, the ecosystem calling on us and seeing what we can do to support more information, more analytics put out in the ecosystem for all of us. See you, Jacqueline.
Can you hear me?
Yes.
Yeah, so for me, my parting shot would be just calling out for collaborations within the sector. I know there's a lot happening, but it's in bits and pieces, calling all enablers. Let's join forces. Let's work with the various partners, the regulators, the IPSs, scheme participants, to push this gospel of digital payments forward, and particularly looking to respond to the voice of the consumer by incorporating what they want to use, as opposed to what we want to sell for purposes of financial inclusion or driving financial inclusion. So our doors are open. Let's engage from the SIIPS perspective, but even beyond SIIPS, let's have dialogue. We're always open to facilitate conversation in the industry for the sake of ensuring that we have instant payment systems and instant payment systems that are inclusive. Thank you.
Thank you very much, Sabine and Jacqueline. I know that the SIIPS 2024 TOR are already on the table, so you're already on the study block for the next SIIPS. Let's keep connected, everybody. Thank you for joining us. You can visit our website to download the SIIPS report and asset. There's interactive maps, videos, case studies for the SIIPS. I also encourage you to join us we have our own community of practice on LinkedIn where we discuss digital payment topics. And of course, follow us on social media to keep up to date, and then see you soon for our next webinar. Thank you very much. Bye.
Thank you very much.
Thank you, everybody.